Hi, I'm Troy with BBSI. I'm an area manager working in our Sandy, Utah location, and we've been working on the CARES Act for about a week now. As soon as the first draft went through and was signed by the Senate, we started looking at this, tearing it apart to see what parts of this actually will affect our clients. And we work with a lot of small and medium-sized businesses, some pretty large ones as well, but the majority of our clients are going to be in the small business range. And we wanted to know really how is this going to affect them and see how we can help them best navigate the CARES Act because there's so many changes going on right now and a lot of concern. So we're going to go through this. This is not a perfect presentation. And as you can tell, I'm working in my basement here, not a pretty office. Um, and and I might make a few mistakes on here as I speak, but that's okay because right now we have to just move forward with business. We don't have time to do things perfect. We're in the type of mode where we just have to go. And you may have seen a recording of mine earlier or something else where I've said, if you're one of my clients, where it's, perfection is the enemy of good and good is good enough for this event. That's kind of the way we have to go. Luckily, because of the CARES Act, we've been given a little bit longer runway. We don't have to take off on the journey quite as soon as we thought we were going to, and this is going to help us. So we have a little bit more time for planning. So maybe not just good, but maybe we can get to better. I don't know if we're going to get to best right now, but we can definitely get to better and make a good plan on that. Let's take a look at this and see. So before I get started, I want to just start out with the normal. It's a disclaimer. Okay, so this presentation does not fully constitute, does not constitute legal or tax advice. It's provided solely for informational and educational purposes and does not fully address the complexity of the issues or all the steps business must take under applicable laws. You should consult your professional advisors regarding your individual situation. Hopefully you've got good advisors in your business. This is one of the things we do with our clients at BBSI. Now BBSI undertakes no obligation to update the information in this presentation, and no representations are made that the content is error-free. Again, we're running with this as quick as we can to get it out to you, and there's always that opportunity that we may have an error in here. All right, so let's take a look. The federal response to COVID-19. We've had 3 phases. And with that, you've got, phase 1 was the Coronavirus Preparedness and Response Supplemental Appropriations Act. Try to say that 10 times fast. This basically provided $7 million in disaster assistance loans to small businesses. It also is what put in place the emergency funding for the federal agencies to start getting involved in this better. Right after that was phase 2. That's the one that a lot of us are familiar with or afraid of. The first thing that happened with the FCRA, FFCRA, and that's the Family First Coronavirus Response Act. A little bit easier to say. That was 43 pages, still pretty good. I mean, like I said, the first one was 12 pages, second one was 43 pages. Not too bad for a bill. A little bit easier to understand. Cost was between 40 and 120 billion dollars is the estimated cost on that one by the time we're done. And this this is the one that provided mandatory sick paid leave and paid FMLA leave for any employees due to COVID-19, right? And this is if you had less than 500 employees, you're part of this. And it provides a dollar-for-dollar payroll tax credit to offset the cost of paid leave to employers. Pretty neat thing that came out, kind of scary, but at least there was funding for that. Now there was a third bill, a phase 3 on this, and that's the CARES Act. Really easy to say. What it stands for is Coronavirus Aid, Relief, and Economic Securities Act. I like CARES a lot better. So this is what got signed on Friday, and it was 335 pages, about the most exciting reading I've ever done. No, I'm kidding you. And the estimated cost on this is $2 trillion. Wow. And let's take a look at that's what we're really going to talk about in this presentation today, is the CARES Act. Now, there's actually 2 parts of this. Okay, there's the Paycheck Protection Program, known as the PPP loan. You're going to be hearing that quite a bit from people. Okay, the other is the deferral of employer Social Security taxes of that 6.2% of your payroll taxes that gets paid to the federal government. And that can be deferred. We're going to talk about how that looks like, along with an employee retention tax credit. Now, those 2 bullet points on the bottom, you can choose those, or you can choose the PPP loan. You can't have both. All right, so let's look at kind of how that works. So they are mutually exclusive. You can't have both. Let's look at the PPP loan, and that's where most of this presentation is going to be on. And the reason for that is, as we really looked at the math for all of our clients and for most of the scenarios that we could come up with, it by far was a better program for the small businessman, or business person. And so let's take a look and see what that looks like. So on the Paycheck Protection Program, or the PPP, that was a $350 billion. Okay, it reserved that in provisions for loans to small businesses during this time. And this is a new type of SBA Section 7A loan. The good thing about that is Section 7A loans have been around for a while. We already know how to do them. And I shouldn't say we, because I'm not a lender, but the banks and our lending institutions, anybody who deals with the SBA, this is a walk in the park. It's very simple for them. There's nothing new that has to come to the table there, other than they have to understand how to process it on their side. Most of the banks, as of this morning, I think two of the major bank sites had stuff up on their website. I would imagine by tomorrow or the next day, most of the lenders that deal with the SBA should have some nice links for how to apply for it, what to do, and we'll talk about that a little bit here in a minute. These are for loans that are made between February 20th and June 30th of this year. You don't want to go past that date, or else you've missed your window. And I'd get in line quick. I'd get involved in this. So they're only available to qualifying small employers. Now, small employers has changed a lot. And we're going to go through that in a slide or two down the road here to talk about the new definition of a small employer, a small business. So the SBA has had to change that a little bit with this bill. And the best part is, which is why it's highlighted here, up to 100% of the loan amount is eligible for forgiveness. That's what we want to see. All right, so what's the difference? Let's talk about what a small business actually is. Typically with the SBA standard in the past has been that you have to meet the SBA's existing definition of a small business, okay? And there's quite a few little things you'd have to hop through there to actually fit into that mold. Now with the CARES Act, they have completely opened this thing up. What it really means is you have less than 500 employees. That should be a pretty good a pretty easy thing for you to figure out. So what you want to look at is, how many employees do you have? Okay, you have less than 500, you probably are a small business. If you're a nonprofit and you have less than 500 employees, you're probably a small business. The other thing, here's the big change. Here's one of the big changes. If you're in the hospitality and food, okay, or like a food service company, now your NAICS code has to start with a 72 for this piece. But again, that's hospitality and food service companies. That $500 employee count is per location at different addresses. That's big. It used to be your entire operation. Well, now it can actually be, if you're a chain with 100 restaurants and each one has 50 employees in it, or 60 or 70 employees, you can actually qualify because each of your locations are separate now. It also has to do with franchises. That's huge. Because in the past, what they would do is there was affiliation rules that were put in place for small business where the SBA loans would say, you know what, you don't really qualify because you're part of an affiliation with a much larger company as a franchisee. And they should be able to give you funding instead of the SBA having to do that. Well, that's no longer the rules with the CARES Act. So those are some pretty big things. If you're doing business with a PEO like us, this doesn't affect that at all, even though we have thousands of employees here in Salt Lake. And I couldn't even tell you the number nationwide that we have as a PEO, because we're one of the oldest and largest PEOs out there. It does not in any way, shape, or effect hurt you in any way with that. You can still apply for these things, and that's because it's per your location, and the PEOs have a carve out for this that does not affect that affiliation rule. Okay, so let's look at some of the loan characteristics and why this is a really good advantage to you. The maximum loan amount is the lesser of two different things. Okay, so you've heard, hey, I can get up to a $10 million loan. That doesn't mean you can get a $10 million loan, all right? It's going to be 2.5 times the average monthly payroll based on this last year, the last 12 months looking back. That's really important. I had a few people call me today saying, can I pay myself $100,000 this year already? $50,000 extra right now, $60,000, $70,000 extra today because it's the last day of this month. And I have no answer for that. What I can tell you is that they're looking back at the 12 months before this process and seeing what your average payroll was, and so it's going to be the lesser amount of either that or up to $10 million. That's where that caps at, and a lot of small businesses are not going to have $10 million be the average of 2.5 times their monthly payroll. But there are some out there like that. So loans will be 100% guaranteed by the SBA. That's awesome. The SBA normally is going to be about a 75, 80% guarantee on that. And with this, they're guaranteeing the entire thing through the CARES Act, which is just wonderful. Because of that, there are some loosening of some of the requirements, and we'll get into that in a second. The availability of credit from other sources does not disqualify your eligibility on this, by the way. So you could have a line of credit of $500,000, doesn't matter. It has nothing to do with the CARES Act. You can still get this loan, and you should, because the rates are just wonderful. There's no application fees or closing costs. You got to love that. Non-recourse, no collateral or personal guarantees are imposed on this. When have you ever heard that about a business loan? Maximum interest rate is 4%. Maximum term loan terms of 10 years on this program. Now, the first 6 months of this is automatically, there's no payment. They're just deferring that. And you can actually ask for this to be deferred for an additional 6 months for a total of a year before you have any payments on principal or interest due. It has here up to 100% of the loan can be forgiven as well. We're going to talk about that in a minute and how that's being done. So the maximum loan amount, that's what you're all wanting probably to wonder is how can I really get this? So we've already talked about it. It's 2.5 times your average monthly payments of payroll costs. Okay, and there's a calculation on that during the first year period before the date the loan was made. So we're going to look back 12 months, right? And now, a special rule will apply for seasonal employees. If you have those, get a hold of me, and we'll talk about what that looks like. But right now, on the payroll for most of you, the payroll costs will include your wages, your tips, your vacation and sick pay, your group benefits, your severance that you've paid out over this last year, retirement benefits, state and local taxes on employee compensation. Okay, state and local, not federal. It's important. So let's look at what's excluded on this is the compensation of in excess of $100,000 for an individual employee. So if you have, let's say in your organization, you have 4 or 5 people that are making $150,000, $200,000 a year, the calculation has to calculate them at a maximum of $100,000 per year. So the additional amount does not go towards that. And so when you're calculating what your average payroll actually is, you have to do that little bit of math. It's not that tough. Just go ahead and cap everybody at 100,000 that's over it, and then average those in to figure out what your average payroll is. It also does not cover anything that you're paying underneath that FCRA, the FFCRA paid leave that we talked about in the beginning. That doesn't come into that equation. Okay, so now on the loan forgiveness, how does that look for? It's equal to the amount of qualifying expenses during the first 8-week period, this is important, after the origination of the PPP loan. Very important to take a look at that, to track that, and to figure out what your expenses are going to be. We've done that, and we're going to show some samples in a little bit, but I just want to make sure you understand it's the first 8 weeks after you get funded for that, after the origination of that loan. Now, qualifying expenses on this would include payroll costs that we just defined, right? Rent payments, mortgage interest. Now, no principal payments. This is the interest on a mortgage payment for your business, right? Utility payments, and that's going to include your electricity, your gas, your water, your transportation, telephone, or internet access. You know, that's what they're counting as your utilities. Forgiven amounts are not taxable. This is huge to the small business. Okay, this is a tax-free grant. That's one of the reasons this is even more attractive than the other half of the CARES Act, and why our clients are, this is the way to go, is you don't have to pay taxes on this later on, because it is a tax-free grant. That's wonderful. Forgiven amounts are interest-free, and you can actually get forgiven up to 100% of that loan. All right, so let's do some examples here. Let's say that your company has $900,000 in an annual payroll. Okay, this was one of the scenarios that we ran. The eligible loan amount is $187,500. Got that by doing the 900,000 divided by 12 months times 2.5. Pretty simple calculation. Of course, you have to remember if any of those are over $100,000, cap them at $100,000, add it back in. It might end up being a little bit less annually, but at least you're going to get the calculations right. So in the first 8 weeks of the loan, the company incurs these expenses. Let's say there was $150,000 in payroll, $8,000 of rent, and $2,000 of utilities. That's going to give you a qualified expenses of $160,000. So your loan forgiveness If all this is the way it worked out, is $160,000 that loan you don't have to pay back. Now the loan balance of $27,500 is what it is left over, and that would be repayable up to 10 years on payments at that maximum rate of 4%. That's pretty good. Pretty exciting stuff. So let's take a look at this loan forgiveness and how it actually works, because this is a sliding scale. It's not an exact science. Actually, it is if you calculate it right. So the loan forgiveness is reduced proportionally to the reduction in employee headcount during the COVID-19 crisis. Why would they do that? Oh, because they want you to retain your employees. They want you to grow. Now, it doesn't mean you have to keep them the entire time, because guess what? Right now you're hurting. You may not have them working. And you might have some time where you have some furloughs going on, possibly a layoff. And depending on how many you bring back during the magic window, right, during this time, is what they're going to base your refund on. So let's look at this and say you have an average number of FTEs during the first 8-week period after the original loan divided by the average number of FTEs during the 8-week reference period prior to COVID-19. I think I said that right. That equals your forgiveness reduction factor. We're going to put some numbers in here in a second and make some sense of that. So the reductions can be completely avoided, by the way. This is cool. As long as you get those employees back to work for you before June 30th, so you've been able to recover. The economy's opened back up. Things are going okay. You get your manufacturing lines going again, or your deliveries going again, or whatever it is, your widgets that you're making. If you can get them back in those seats before June 30th, you get the whole thing forgiven for that total amount. That's exciting. And that's something to really consider and make sure you don't miss that window. June 30th, write it down, put it in your calendar, make sure that everything's taken care of by June 30th. That's very important in this. Let's take a look here. So on that limit again for reductions of compensation, there's also another factor in there. In this process, you can reduce the pay of your employees. In fact, a lot of employees or employers are doing that right now to save costs. They're saying, hey, you know what? On these positions, we've got maybe our management positions and mid or upper management, we have to cut by 25%. Maybe we're cutting it by 50%. You can cut up to 25% and there's no hit to you when it comes to what's forgiven. You're fine with that. They understand right now that you're going to have to cut some of these things. If you go over 25%, then it's a dollar for dollar discount. Is that the right word? A dollar for dollar difference as to what you get refunded. So it's pretty important to understand. So if you had a $100,000 a year person, you can cut them down to $75,000 a year, and that does not affect your grant whatsoever on this forgiveness. If you went and took them down to $60,000 a year, yeah, you're going to get some of that on a dollar for dollar. You're not going to get that refund. However, that can also be brought up by, what's that magic date again? June 30th. So if you bring them back to at least 75% of what they were making, you'll be okay, and you'll get that full amount done as that tax-free grant. So let's look at some other examples here for the PPP loan, and this is with some limited forgiveness in here. We've thrown a couple things in just to kind of give a little bit of information, let you see it visually. So let's take a look at your total eligible forgiveness based on a qualifying expense in an 8-week period times the limit for reductions in headcount. So the company laid off 5 of its 20 employees, right? Well, then minus the limit for reductions in compensation. So that what we'll do is we subtract anything beyond that 25%. So here the example we have is reduce 3 of its employees' pay by $5,000 each in excess of the $25,000 threshold. That means you've gone past that 25%. So that'd be $15,000. So that brings you to a total adjusted forgiveness of $105,000. I kind of hope that makes sense. I think the next slide might help with this too. Actually, it won't, but we'll get back to another thing that may help with that. So how to apply for the loan? That's the other question everybody has. I have been asked by more CPAs, attorneys' offices, business people, is that, hey, can I apply through BBSI? Are you guys handling this type of consulting? And the answer is no. Just go to your bank. Go to your lender. And so you apply directly through a bank or a lending institution. Now, currently there's about 1,800 institutions that are part of that, and the SBA has opened this up to lots of new lenders because they know how much the processing is going to have to happen with this. So there will be new lenders that also are opening up to do business. Now, Most likely your bank is going to participate in this because most banks do. You don't have to visit a government institution. You don't have to apply online for the program or anything else like that. This is something you can do right through your lender. The recommendation I'm going to first tell you is call your primary bank. They already know you. And by the way, that's who you bank with. And they're hurting just like you're hurting. So let's put business right here locally where we need it to be with the people that we know and love and trust. Okay, if for some reason your bank isn't taking part of this or doesn't understand it, or you're not happy with your bank, call another bank. Another lender in your area that you have a relationship. You're not going to really be seeing a big difference on rates or anything like that. It's the program is the program. So use the people you have trust with right now. And then worst case scenario, if you just your bank won't do it, you don't know who else to go through on this, and I think that's going to be a pretty rare case right now, then you can go on the SBA approved lender site on the SBA online. They have a lender match tool that'll help refer you to somebody. But again, I would so much rather you work with your bank. Again, your banker needs your business just like I need your business. It's just like your customers need your business. So let's be loyal to our lending institutions and to our banks. Call them and get in line. I've had clients that are already applying for this. Just get in line, make an appointment, go down and meet with them. And that's what you need to do. Actually, I shouldn't say go down and meet with them. Make a phone call. We're in a digital world today. We're not doing the bank visits, and meet with them online or whatever it is that they're doing and get the process started. It's that simple. Okay, so we talked about the PPP. All right, and now we're going to talk about the employer deferred of your Social Security taxes, and also the employee retention tax credit. Again, mutually exclusive. You can't you choose one or you choose the other. You can't have both. Let's see what that looks like. So the deferral of employee Social Security taxes. Employers may defer employer's share of Social Security tax deposits, due for the period beginning on the date of enactment, which is March 27th through December 31st, 2020. So for the rest of this year, you can defer those taxes. Now the payment schedule to pay those back is 50% of it's going to be due on December the 31st, 2021. The other 50% is going to be due on December 31st, 2022. So this is an interest-free loan. The deferral option, again, is not available if the taxpayer has had indebtedness forgiven underneath the Paycheck Protection Program. You can't do both. Okay. Now, client. On this, I have some notes here, which is really mainly for our business. We're a PEO. We do payroll for companies. And so really, when we pay your payroll, we pay your taxes at our RFEIN as a PEO. And we have it, it's been set up with them that basically anything that happens on our clients that choose this method, they have the sole tax responsibility of paying that federal tax 1 or 2 years from now. And with PEOs, the IRS, they are completely with that. So that's what that piece is. And how this whole thing is going to be administered is still being worked out by the IRS. But our clients are A-okay. If they go this route, we're all set up for it. We already have everything in place. Employer retention and tax credits. As we go across this, the credit is available to any employer. Okay, so that's a good thing here. One has that was carrying on a trade or business during a calendar year in 2020. Oh, wait a minute, not everybody. Only some of you, right? You had to be doing business. Of course, most of us that are listening to this have been doing business at least during this year. Let's see what else that has. With respect to any calendar quarter, it has to had its operations fully or partially suspended due to government orders regarding COVID-19, or had a decline of at least 50% in gross receipts compared to the same quarter in the prior year. Take a look at your books. See if you even qualify for this. More than likely you've been suspended due to a government order. That's a possibility unless you're an essential business and haven't been. So you may or may not even qualify for this one. And again, we're not really seeing that the math works out all that great for it anyway. The amount of credit is 50% of the qualified wages, okay, with respect to each employee for the quarter. The maximum wage taken into account per employee is $10,000, okay? So the maximum credit you get per employee is $5,000. Let's take a look at what that really qualified wages means. With employers that have more than 100 FTEs, wages paid to employees not performing services due to COVID-19 related circumstances. So they're either suspended of operations or reduced gross receipts. Employers with under 100 FTEs, all employees' wages paid would be qualified. This includes employers properly allocatable qualified health plan expenses. It excludes paid sick or family leave under the FCRA and those that receive 100% credit. Now, let's look what else this has to do. Other noteworthy provisions in this. Credit is taken against the employer's portion of the Social Security taxes. Okay. Excess credit is treated as an overpayment and it shall be refunded. We don't know when, we don't know how yet. They haven't put that in place yet. Companies under common control are considered a single employer. That's different. Remember on the PPP, we talked about you've got the different businesses, different offices, things like that would be counted as a separate towards your numbers. On this, if you have 2 or 3 business entities, it's one business. That's the way they look at it. You can't have multiple things within this. Let's take a little bit further here. The pay rate may not be higher than the month immediately prior to taking the credit. You can't pay people more money than they did last month. Oh, that's totally different than the PPP program, isn't it? No doubt benefit if, let's see, no double benefit if already taking other income tax credits based on employee wages. Income tax deductions for wages must be reduced by the amount of any credit received. Okay, this reduces the effective amount of the credit by almost 21%. The credit's not available if an eligible employer receives a loan under a Paycheck Protection Program. Again, remember, one thing or the other. And then I just have notes here again for PEOs is that they're allowing this to work within a PEO structure the same as if you were paying those taxes yourself. Now, the PPP loan will be the better choice for most small businesses. By far it is. And we're going to go through some calculations here in a minute, so I'm just reading this stuff. And I'm sorry if I'm boring you to death, but this is really good information that I think is worthwhile going through here instead of just sending out a sheet to you. The broader criteria to qualify for the PPP loan versus the tax credit is one of those things because, again, it's so easy to get approved. This really has nothing to do with your credit worthiness. It has nothing to do if you have other ways of getting loans. You know, you're not backing this loan with anything. It's not signed by, you know, you're not the guarantor on it. That's one of the big advantages of that PPP loan. Mathematically, it's definitely better financial benefit for most of our companies. In fact, everybody I've ran it for so far, by far, was a better financial benefit to the PPP loan. And it also has established processes already in place. Remember the SBA loans 7A that we talked about? That's already in place. They already know how to fund it. They've been doing it for years. It's a very simple process. You're going to get your money a lot faster with the PPP loan. So here's kind of what it comes down to when you start looking at the actual breakdown of a PPP or the payroll tax credits. Okay, these are the scenarios. So if we had, I'm just going to run through a couple of these. The very top one, if you had 10 employees, your average wages for those is $60,000, and you've got an annual rent, mortgage interest, maybe $30,000, annual utilities of $8,000, and applicable quarters for the tax credit. Let's say there was 2 quarters that this actually worked for. Your PPP loan forgiveness could be $98,000. Okay, if you're going on the other route of the employer tax credit, you would get a whopping $40,000. To me, I'd take the one on the left. As you look down here, going all the way up to even, let's say 80, and 40,000 as an average, okay? And we have a lot of clients that are closer to that, or 50 and 30,000. You can see we've done a lot of different combinations here between these. And really, when it comes out, there is none of these on the employer tax credit that really even comes close to what you're getting on the PPP loan forgiveness program. So again, that's what pretty much, now when you get over 100 employees, and we start really playing with the numbers in our calculators and our systems, almost always it's the best on the PPP loan forgiveness. So there's going to be very few companies that we service that would go on this other side. Okay, income tax changes to provide cash flow. These are some other exciting things that are going on, and we just thought this was really important to throw out here. This is not part of the PPP program, but this is part of the CARES Act. And some things to understand. There's been some retroactive changes to several tax rules that go all the way back to 2018. talk to your accountant on this one. You want to talk to your CPA on this because it is probably worthwhile, depending on where you're at on your taxes back in 2018, to refile that. They're letting us amend those returns right now and claim the refunds, get those checks. Okay, so loss carrybacks up to 5 years back. Wow. Accelerated depreciation for certain real property. You may have had some purchases that you're only able to depreciate a little bit in those years. You might be able to take the full depreciation. So again, talk to your accountant, talk to your financial people on this. Increased loss limitations on pass-through business, immediate refund of AMT credits. And this is allowing increased deductions of business interest for 2019 and moving forward, it looks like. So again, talk to your tax preparer about how this may apply to you. I'm not going to try to give you advice on if this is the right way to go or not, but definitely talk to your preparer. Okay, some other CARE Acts that you might be interested in, or other parts of this that you've heard bits and pieces of, and let's just talk about what this is doing for you. So there's a direct financial assistance to individuals. Your employees really need to know about this. You do too. This is going to affect you because you happen to be a person as well. So with this, there are the financial assistance is $1,200 for an individual, $2,400 for a married couple, $500 for a child. And so, there's calculators online that'll show you how much you're going to get for that. I'm down to 3 kids at home. A few years ago, this would have been good. We have 8 children, but we only have 3 that are now dependents. But so that's something that's coming to you, but it's also based on how much you made last year. So if you made over $100,000 as a single, as an individual, you don't get this. This is not for you. If there's 2 of you, I believe it's $150,000, $75,000 a piece. And I might be wrong on that. I may need to look that back up. But basically, that's kind of the how this thing works here. So the upper income earners are not going to receive this. And it just depends. But again, that's just some information for you. Most of your employees are going to probably fit right within there and be pretty happy about getting that stimulus. Now, the state unemployment expansion. This is good and scary. If you're on unemployment, you're probably going to love it because for 4 weeks, you're going to get $600 extra on your unemployment check. 4 months, I think I said weeks, for 4 months. And they're also extending the amount of time that you can qualify to stay on unemployment by, I believe it's an additional 13 weeks. I'll have to look that one up, but they have extended that too. The fear on that is that extra $600 per week is going to put a lot of employees in a place that they're making more money on unemployment than they may have been working for you getting earned, especially if they're at the $12, $13, $14 an hour type range. And so that's something that we're a little bit concerned on, because are we going to have employees that don't want to come off of unemployment? Think about it for a minute. Hey, I'm making really good money to stay home. So that's something to really consider. Might be kind of tough to find employees during that period until that 4 months is over. We'll see what happens with that. Now, benefits and health care plan rules have changed. There's better coverage because of COVID-19. The FCRA paid leave, technical corrections, and rehired employees. There's actually some changes that are within there. The retirement plan relief. This is kind of a two-edged sword. You can actually withdraw because of this money out of your plans, your retirement plan, without that withdrawal penalty. The problem is, if you're like me or anybody else, all those funds have been kind of reduced because of the stock market. Not a great time to take your money out. And so I don't know if that's really going to be used all that much. Hopefully not, unless you just happen to really be in a good fund somewhere that didn't get hit. Let me know what that is. I'd love to hear it. Charitable contribution deductions. We put this one in here. I put this here because there's something happening there right now with the changes in taxes. A lot of people aren't itemizing anymore. However, they're still giving us a $300 deduction is allowed even if you don't itemize for this year. That could be really important for these nonprofits, for charities. They're hurting, and I'm glad that they put that provision in there. Hopefully, that'll give them a little bit of relief where we can do some help with that and get those deductions. Let's see. So that's kind of it on the slide here, the slide deck, and the information that we have. I do have calculators I can run that we've built for this. If I know your average payroll based on capping payroll, nobody over $100,000, remember, as to what you paid over the last 12 months, how many employees you have, how much your rent and your mortgage interest might be, your utilities, and those types of things. I can plug that in and give you an idea of kind of like the slide. Well, I'd have to go back to it. That they give us some examples there, and we can look at some more exacts for you. If you're one of my clients, I've probably already gone through this with you, or I'm getting ready to make another phone call to you. We've been very busy here at BBSI, but reach out to me. Feel free to connect with me on LinkedIn. And if you have questions, send them through there. It's an easy way to get a hold of me. I just realized my email's on here, so I don't necessarily want to get spammed too much, but if you have a question or want to reach out or have questions about your business, feel free to call me or email me. We'd love to talk. And hopefully this helped you out a bit. One last thing before we're done, I'd just like to just remind you, this is not a fix. This won't fix your business. Okay, it's not a magic bullet. It's not a magic vest. It's nothing else. All this has done is given us a little bit longer runway for this journey that we're taking off on. We were worried last week that we had a very short runway and we just had to go. We had to make this journey without knowing what was ahead of us. We still don't really know what's ahead of us. So take a look at your business. I'll give you the same advice I've been giving my clients for a couple weeks on this is we don't know where this is going to head. I know you can do it. We all do it. That's why we're here. But we don't know what this journey is going to really look like. And so take a little bit more time, luckily that we've been given by the CARES Act, to look at that, at where we think we're heading, and make the cuts that you need to make it through this. Look at a 3-month mark, look at a 6-month mark, look at a 9-month mark, look at a 1-year mark. In our own business, we're even looking at 18 months if it took that long to bring the economy back to where we're really feeling good. And I think we're going to be there a lot quicker than that. But take a look at what cuts you might need to make, what types of things you might need to do in your business, and to be able to make it through. And one of the scenarios that I'd say is look at a 6-month mark that, hey, if within 5 or 6 months from now things have turned around, we're back in business, we're doing business not as great as we were doing right now, but we know it's heading there, okay, and we're getting out of this thing. What do you need to do to survive to that point? And as you do that, I think you're going to see what you need to do now to make sure that you do survive that. We want you to be here. You need to be here. I need you to be here. We need great businesses, and I hope this is of value to you. And I'll keep posting things up on my LinkedIn and sharing things out with our clients. And if you'd like to get that information, again, just reach out to me and I'll put you on the list. Thank you very much.